Hello everyone. In our previous videos we talked about the advantages and objectives of accounting. In this video we will be discussing some accounting terms. So let's start with the basic accounting terminologies. Let's start from the very first term, that is business transactions. The economic event that relates to a business entity is called a business transaction. For example, sale, purchase, cash paid, cash received, assets purchased, etc. Next term is proprietor, an individual or group of persons who undertake the risk and invest funds into the business as capital to start a business is known as proprietor. Next concept is capital. It is the amount invested by proprietor in the business to start a business. It can be in cash or in kind, assets like machinery, furniture, property, etc. Next concept is drawings. It is the amount or benefit withdrawn by the owner from the business for personal or domestic use. It may be in the form of cash, goods, or assets. Now let's discuss the meaning of assets. Any valuable thing owned by the business are known as assets. Assets are used to run the business to earn the profit in the future period of time. For example, cash, machinery, furniture, etc. Assets can be broadly classified as fixed assets and current assets. Fixed assets are further of two types, tangible assets and intangible assets. Current assets are further classified into liquid assets, fictitious assets, and wasting assets. Now let's discuss the meaning of fixed assets. These are acquired for long-term use in the business. They are not meant for resale in ordinary course of business, for example, machinery, furniture, building, etc. These assets can be further classified as tangible assets and intangible assets. Tangible assets are the assets with physical appearance. These can be seen and touched. Revenue generation is possible with these assets. Some of the common examples of tangible assets are land and building, plant and machinery, and furniture and fixtures. Second one is intangible assets. These are the assets with no physical appearance. The assets that cannot be seen and touched are called intangible assets. These assets affects the profitability of an organization. Some of the common examples are goodwill, patent rights, and copyrights. Let's discuss the meaning of current assets now. These assets are for the shorter period of time, ranging up to 1 year. An asset that will turn to cash within the length of its operating cycle is considered to be a current asset. Some examples of current asset are cash in hand, cash at bank, debtors, stock, prepaid expenses, and outstanding income. Next term is liquid assets. An asset is said to be liquid, which is easy to sell or convert into cash without any loss in its value. All current assets except prepaid expense and stock are liquid assets. Some of the common examples are cash in hand, cash at bank, debtors, bills receivable, short-term investment, outstanding income, etc. Now let's discuss the meaning of wasting assets. Assets whose value goes on declining with the passage of time and usage are known as wasting assets. Examples of wasting assets are coal mines, oil wells, minerals, other natural resources. And the last term to be discussed is fictitious assets. Fictitious assets are those assets which do not have physical form and real value and cannot be converted into cash. These assets are the type of losses. These are sometimes also called as deferred revenue expenditure. Examples of these assets are discount on issue of shares or debentures, advertisement suspense account, profit and loss, debit balance, preliminary expenses, etc.